So it's like you are doing one thing for plenty departments, but the scope of what you are supposed to do when it has to do with internal controls over financial reporting is limited. And that is one of those things that ICF has shown us. So if you look at this very well, you will discover that it's for the good of the business. Before talking about how good it is for the business, what is the responsibility of each party? For example, it's the responsibility of the board to ensure you have policies and practices that will ensure the internal controls over financial reporting is good. Yeah. However, it's the responsibility of management to establish and maintain that system. So effectively, they are the ones ensuring that what we are doing is in compliance with COSO, for example, when it comes to internal controls over financial reporting. So while doing ICFR, it's as if management is reporting to management to say, we have assessed our internal controls over financial reporting, and this is what is good that we are doing. These are the things that we... So for example, we did one for a microfinance bank, for example, and the MD of the microfinance bank happens to be a very one of these risk management associations and institute. Is the head. So when we're going to do it, we did this one probably like 4 months ago. When we're going to do it, I was thinking, see if the MD is actually a doctor or whether a professor is actually, their internal controls will be 100%. That was my thought. However, when we finished, we actually had about 15 recommendations of things that needs to be fixed. And the sincere truth is that whenever we finish, we always like to have the MD in place whenever we are presenting what we have seen. So he was there, and we are presenting to them. These are your weaknesses. These are the solution. In all sincerity, we did not take away any of those 15. That tells you that no matter how you think, you are very, very, very strong. There might actually be one thing. That is why the COSO framework is a universally recognized framework that has been there since 1986. So it's not a new framework. It's only that we are just starting to use it. So the role of management is to ensure that they have established the system of internal controls over financial reporting, and they are maintaining it and ensuring that they get a report. So whenever we as consultants are doing this for management, we are reporting to management to say, management, we have helped you to assess how strong or efficient your internal controls over financial reporting is. And the role of the auditor is now to review or assess the report that we have done. So you cannot be the auditor, you will do it and you will assess yourself. No. Because the role of the auditor is to take the report that has been done by the consultant and now give an attestation. Now, that is just the same way when you actually have a financial statement. Management prepares the financial statement. Auditor gives an opinion. So also for ICFR, the consultant help you out, then you now get what do you call it? Auditor to come and give an attestation. So effectively, in your financial statement, you are supposed to be having two opinions. One opinion for the financial statement, which is the normal thing you have, and another one called an attestation of the internal controls over financial reporting. So that is the role of all these people that I just explained. So while we are doing ICFR, the first point we start with is to obtain the financial statement. And the whole idea is that from the financial statement, we can scope all the processes that you have in the company. So processes that you don't do, that don't have an impact on the financial statement, then we don't need to disturb ourselves with it. For example, processes like sweeping the office, it has no financial impact. We are not going to look at that process. But processes that have figures in the financial statement, we now need to look at it and say, oh, what process gave birth to this? And those processes are now the ones that we need to focus on. And while doing this too, we need to look at the materiality. So for example, materiality will guide the work that needs to be done. And while assessing, we need to do all this. Let me try to actually just go straight down to more important. Let me just go to some of the benefits. Some of the benefits. The sincere truth is this. Let's even give it to FRC. Yes, they are pushing us to do it, but the real benefit is for the company. It's actually not for FRC. And the benefit is the fact that, for example, I looked at, there are companies that don't have risk register. There are companies that don't have adequate controls. Many. No, I was reviewing one of the work that some of my colleagues did last week, and a very prominent company that have been around for about 30 to 40 years. And I was reviewing the process, and I discovered that even the people that are doing the process, they said they know that the process is problematic. However, management is not ready to listen to them. So they knew. I did one last year too, and the chief internal auditor of that pension company, it was a pension company, another one that we did last year, and the guy was saying, when he saw the report, he was like, thank you very much. All of these things, some of them have told management before, but they are not listening to me. So one of those things that internal controls or ICFR helps us with is to enhance risk mitigation. It doesn't mean the risk have crystallized, but you see, one day it can crystallize. Let me give you an instance. In some of the ones that we have done, they are using powerful application. Some of them are finance houses and microfinance banks, and I discovered that they don't even have backup of those things. So I asked the person a question. What about if this particular company that is doing this thing for you, something happened to them and all the backup goes away? What will you do? So they never even thought about that because they just had faith that, oh, the thing is taught somewhere. But it's taught somewhere does not mean you can control it. And if you can't control it, you don't have it. So one of those things that you get as a benefit here is risk mitigation. So in such a situation, at the very minimum, take a daily backup. It might look as if doing too much. However, the day everybody's data will go down, that is the day you will discover that that is an act of risk mitigation. Number two, it actually increases operational efficiency, because when you do it, you will see the lacuna in your process. As in you yourself, you will see it. No, there was one of these guys that we did for, when he saw, they thought that they had a very wonderful process. This one was in the manufacturing sector. One of the big supermarkets that we see around, very big, you know them, they are all around. And when we finish it for them, and the guys actually saw the lacuna in their process, the sincere truth is that they were saying thank you. Why? Because it was an operational ineffectiveness that they didn't even know. So it increases your operational efficiency. Another one that it actually helps you to do is regulatory compliance. So I was about discussing yesterday. I was just discussing, and members of Action, I believe many of you are here, and you have gone, for example, you actually got a leeway not to go ahead and do some of the things you were supposed to do. Coincidentally, I was with, whether it was the general secretary or something, I think I spoke with him, I think in February, if I'm not mistaken, whether it's the general secretary or one of the members of the stockbroking association. And he was telling me then, the chairman of that group was saying, oh, let's go ahead and do it, because we did for the finance house within the group. So the chairman said, let's do it. But the MD said no, that they should not do it because they wanted to get a waiver. So I got to know afterwards that the waiver came with a cost, and I just thought in my head, you paid a cost to shift it forward. However, the real essence of this thing is not even because of the compliance, it's majorly for the betterment of the company. If the company is efficient, you will discover that your cost will reduce. So really, the person that is enjoying is not FRC. The person is just that you paid cost again to defer what would have bettered the company. So regulatory compliance, however, is one of the benefits, because you won't have to be paying a fine. One of my clients, while doing this, actually said, oh, FRC actually charged them 10 million. For what? Because they didn't do ICFR. Because somebody asked me a question within a class like this and said, what is the fine? And somebody answered and said, that they charged them 10 million. So if you don't comply, there might be some fine. The FRC determines that one. Another major thing, which is a benefit, is the fact that your financial statement is more reliable, because at the very minimum, you have efficient and effective controls, whether it's control environment or control activity or risk assessment or monitoring activities or information and communication. You have competent and efficient internal controls over financial reporting that will actually give you what you actually have. Another major thing which many companies don't do is fraud assessment. Yes, we all have faith that fraud will not come. That is very good. It's a very good thing to have. However, in addition to that, as a company, you need to get ready for everything. So one of those things that we do when we are doing ICFR, we're doing risk assessment, is that we do a fraud risk assessment. Is a compliance thing. You do a fraud risk assessment. So if you have done a fraud risk assessment, you will discover that fraud prevention will be more enhanced in your business. So it is not the day that fraud will now happen that you say, yay, fraud has happened. If you have done a fraud risk assessment, which many companies now will do based on our recommendation, you will discover that fraud will now be reduced to a very, very considerable level. And another major benefit is, if you have done and your system is making sense, you will be able to make better decisions, and everybody will be able to depend on the kind of statements you churn out. Yeah, so basically, those are some of those benefits of going ahead to do internal controls over financial reporting. While doing this, let me just also explain this, that while we are doing ICFR, many of us might actually begin to actually ask the question that, are the auditors not doing something like this before? Yeah, if you actually have an auditor that is doing an ISA compliant audit, so ISA 315 requires
name of the person that is
that
speaking.
the auditor does some.
Everybody. So you can mute now. What is his name? you can tell me to unmute. Just unmute and tell him to unmute. We can, but my own network is just loading. You can just tell him to unmute.
Sorry, Mr. Shehu, kindly unmute. We muted everybody because of that noise. Please kindly unmute.
I've been talking. I don't even know where I stopped talking. Where you stopped hearing.
Apology, sincere apology, please.
Please, where did I stop? What was I talking about? Oh, I don't know if
you were explaining the page you were.
Okay. That is good. I can just take a step back. Okay. So I was just trying to explain that some of us might actually ask the question, does it mean that our auditor never did any kind of this kind of thing before? Yeah, I want to tell you that if your auditor was doing an ISA compliant audit before, they would have been doing something that looks like it, but the scope is not the same thing. So I was trying to explain the difference between the scope of what your auditor would have been doing when they are doing audit and the scope of an ICFR engagement that management is doing or that a consultant is helping management to do. The first one is that the auditor within the ISA 315, ISA is International Standard on Auditing. The auditor shall perform risk assessment procedure to provide the basis for identification and assessment of risk of material misstatement at financial statement level and assertion level. What does that mean? It means that they are looking at it from financial statement level, items of the financial statement. But when we are doing ICFR, we are not looking at it from the global financial statement level. We are looking at it from the perspective of the subs. Processes that give birth to those things in the financial statement. For example, the processes that give birth to the fixed asset you have in the financial statement, or property, plant, and equipment as it is called. The processes include acquisition, depreciation, derecognition and disposal, revaluation, reassessment of useful life, residual value, and depreciation method. All of these processes are those things that give birth to that figure. So when we are doing a review for ICFR, we need to look at all those processes. But when we are doing ISA 3, it is at the financial statement level.
So why am I recording now? I'm already recording. Video. No, it's in video. Yeah, I'm using this thing, OBS Studio.
Meaning that it's done when you are doing an audit. Because when you are doing an audit, remember, the auditor will tell you they are giving you reasonable assurance. So they are telling you we are looking at it at a global perspective rather than more granular. Number two, ISA 315 will also talk about that auditors will go ahead and understand the business, the relevant industry, nature of the entity, the objective and strategy. The scope also is not as exhaustive as the internal controls over financial reporting. Because with internal controls over financial reporting, we'll be looking at all the consequences of the five principles of the COSO framework for control environment. We'll be looking at all the 4 for risk assessment. We're looking at all of the frameworks or all the principles for monitoring activities, information communication, and control activities. So we need to look at all. So the scope is not exactly the same thing. When we're also doing, the auditors are doing their beautiful work. The auditor, based on ISA 315, the auditor shall obtain an understanding of internal controls relevant to audit. Although most controls relevant to audit are likely to relate to financial reporting, not all controls that relate to financial reporting are relevant to the audit, meaning that the auditor does not need to look at all the processes. So like I read, I'm reading it, it's not me, this is ISA 315. It says, although most controls relevant to audit are likely to be relevant to financial reporting, but not all controls that are relevant to financial reporting are relevant to audit. Meaning, if it's not relevant to the audit, they don't disturb themselves about it. But when it comes to internal controls over financial reporting, all the ones that are relevant to financial reporting, you look at it. Things like the presence of those control environment, ITGCs, integrity of the system itself, the design of those. So you need to look at all of that. Really. Number 4, we also need to do more when it comes to the design of the control. whether it's entity level, transaction level, and also looking at the operational effectiveness. Yeah. So these are some of those differences. For example, if you don't have a risk register, when they are doing an audit, they won't tell you that there is a problem. Because for risk assessment, for example, the auditor shall obtain an understanding of whether the entity has a process for identifying business risks to financial reporting, estimate, all of these things. Many audits, when they are done, they won't tell you that, you don't have risk register, there's a problem. However, when you are doing ICFR, it's one of those things. The idea is that if you were not prepared for the risk, then how do you put controls to edge against the risk? Remember, it's internal controls over financial reporting. So that is why some of those things are very important when it comes to going ahead and the scope of internal controls over financial reporting. Yeah. So these are some of those components that we need to actually look at. And I need to also say this one thing before I go on. When you're actually planning an ICFR, one of those things you need to know, not just for today, because this particular thing is what you will be doing not just once, but continuously. So beyond doing it for 2024, the people that are charged with doing this must also have the skill so that you can also go ahead and do it within the company subsequently. So what I advise many clients is, yes, you can get a consultant to do it with you the first time, but subsequently after, ensure that the skill to do that thing, you get it. For example, within internal controls or internal audit, so that internally you can continue doing it and you wouldn't have to be spending too much subsequently after that's the same thing that happened with IFRS. When we're all doing IFRS conversions, we got an expert. Subsequently after, your accounts department continued doing it, which is the same thing we always advise clients. And whenever you are doing an ICFR engagement, remember that the data you would use must be within 90 days of the reporting date. For example, we are doing ICFR for 31 December 2024 year end. The data we will use must not be more than 90 days within the scope of that 31 December 2020. So meaning even if you want to start earlier, you can only start using data from October. Yeah. Why? Because it will have a lot of impact on materiality. Yeah. So that is what the guidance they've given us. And when we are looking at materiality, we are looking at materiality is not cast and stone. You are looking at the nature of the entity. You are looking at how susceptible you are to fraud. For example, in a company where fraud just happened 2 weeks ago, the sincere truth is that the level of the work you would have to do or the level of the controls that you would have to actually test for will actually be higher. Why? Because you have the opinion that the control was not working well before. So your materiality level needs to be lower so that you can scope in more tests and you'll be able to go ahead and be more granular in assessing what you're assessing. So in very simple summary, that is actually what FRC is asking us to do. But beyond that, let's just look at more understanding of what internal controls is all about. Many of us are very great experts. Yes, so really, I know you know many things, really. But you see, the reason why they put the system of internal controls in place is to ensure that effectively we are more strategically positioned to achieve the objective of the company. That's the essence of the internal controls over finance. The whole idea are those three objectives, which are operational objective, financial objective. Those are actually, so you actually have whether it's financial objective, your operational objective, and you actually have those reporting objectives. They are the reason why you're doing all of this. What we want to achieve is to ensure that those objectives are met. But remember, even if you have a system of internal controls, it doesn't mean that you would achieve those objectives. For example, if you don't put the right people in place, or for example, you don't invest the right money, the sincere truth is that you might still not be able to achieve what you set out to achieve. Yes. So whether it's operational objective, reporting objective, or compliance objective, that is the whole idea of having controls or internal controls in place. That is the scope of what you actually want to set. You want to have that in place. Yeah. So also has been around for a while. That's the sincere truth. It's not a new thing. It's just that in Nigeria, FRC is just asking us to go and look at it. It's the council of sponsoring organization. That's the meaning. It's the committee of sponsoring organization of the Treadway Committee. So their whole idea is basically to provide leadership or guidance on internal controls, fraud deterrence, and enterprise risk management. So that is what they do. Those are the kind of standards they dish out, and they've been around for a couple of years. They've been around since 1985. They've been around. So they've actually, and it is made up of people from the Institute of Management Accountants, Institute of Internal Auditors, American Institute of Certified Public Accountants, the Financial Executive International, FIFEI, and the American Accounting Association. They are the guys that came together to go ahead and form it. So why did they form it? Very simple. It's basically to actually give us a framework for assessing how effective system of internal controls is. The sincere truth is that if there's no granular framework, Mr. A will say my controls is okay. Mr. Company B will say everybody's control is okay. Like I just printed an illustration to you that a doctor, a prof, who is the MD, yeah, of a bank, and you discover that even with that, is a prof, and a prof, say for example, a doctor of risk management, and there are still some lacunas, some control weaknesses. So it doesn't really say, oh, because you have all the certificates from school, that it is the framework. So what COSO have done is to establish a framework, having been doing this for many years, and having looked at different business processes and different kind of environment to come up with a framework that can say these are those things that needs to be there for you to say you are efficient or effective. So the whole idea is to give us a framework that will determine whether you are effective when it comes to your internal controls or you are not effective. Beyond that, it's also to actually help us to drastically, whenever you have all this control, this business environment, the kind of business environment where we find ourselves is dynamic. So, and that is why periodically they are reassessing all of those things as we go more into. Before now, technology was more limited, but now in the age of cyber attacks, in the age of all these what do you call it, all these bugs, all these malwares, and all these things that you can just put on the internet and it scatters everything. The constituents of internal controls needs to also be updated every time as these newer environments evolve. So what they get to do is to ensure that as things change drastically, those guidance are also updated to ensure that we continue. And since where they are coming from, the US, many of them are actually from the US, the guys that made it up, their economy is more open to more issues. Why? Because somebody is always trying to attack them, especially financially. So to an extent, they have more complex environments that they can actually use to test. Another major one why COSO is very good is the fact that you are able to engage and seek transparency. So to an extent, giving us a framework to use actually makes it very, very open for stakeholders to be able to say, how did you come to a conclusion that your business process is, or your internal controls over financial reporting is efficient? You just tell them, we use the COSO framework. So if they check the COSO framework, they will see whether it is efficient enough to do that. So, but in a situation where you say we use our own framework within the company, the sincere truth is that nobody might know your framework. That is one of the reasons why using the COSO framework might also be very, very reliable. Another one is the fact that the demand for update and improved internal and external reporting, like this one that FRC is saying. FRC is saying, go ahead and do it. So the demand to actually achieve what they have said is also one of the reasons why this might actually help us. So the COSO framework is one of those, and it's the one recommended by FRC to even be used, is one of those ones that will make sense. Like I said, the COSO framework has 3 objectives, which is operational objectives, reporting objective, and compliance objective. And we have 5 components, which are risk environment, control environment, risk assessment, control activity, information and communication, and monitoring activities. And whenever we are looking at this, remember I explained, we need to look at it both at transaction level, meaning when level of transaction as they come, and entity level. Entity level meaning that there are some things that are not transactional, like for example, the role of the board, like for example, commitment to competence. They are not transactional, but they are entity level controls, segregation of duty. They are entity level controls, override of controls. They are entity level controls. If they are not there, you see all of those signing that we are doing, it doesn't add or remove anything. The sincere truth is that where fraud is done, the sincere truth is that even when you sign all the paper, fraud will still go through. Yeah. So where fraud comes from in most cases is not from signing paper. Control activity is good. Reconciliations are good. But the sincere truth is that if the control environment is bad, you are more porous, even when you have wonderful control activities. Yeah. So that is why internal control over financial reporting is not just about the control activities alone. To also put this in a more succinct way, let me also say that, like I said before, there are principles under each of these components. So like I said, under control environment, you have 5 principles. I told you some of it before. I said commitment to competence. I said integrity and ethical values. You can see them there. I said, basically the role of the board. Yeah, and on and on. So you have 5 principles under control environment. You have 4 under risk assessment, 3 under control activity, 3 under information and communication, and 2. And whenever we are assessing, we are looking at the constituent of these components to determine whether your system of internal controls is there and whether it is efficient or not. So the idea is very simple. If your internal controls is efficient, some of those things that we might see there is the fact that there are more preventive measures than detective or permissive. What do I mean? So I've seen many of these things in many companies, and what I see is the fact that they have a lot of detective controls. But the thing has already entered the GL. You are now going to go and detect it. So if you have beautiful detective controls, but preventive controls, you don't have any, the sincere truth is that you still have problem. Because if it has gone, it has gone. To collect it back, so even when you say we have controls, the question is it design effective? So you will discover that you would have more preventive controls that are designed to actually prevent it before they occur than detective. You might find that. And you would also find out that the components of the COSO framework is present and functioning when you have a system of internal controls that works. And you also discover this, that you have clearly designed objectives around internal controls. So it's not like just, this company is doing this, let us copy it. That company is doing this. No, many times I ask companies, why did you put 4 years as number of years of depreciation, useful life for fixed assets, for cars? Why did you put 4 years? The sincere truth is that many companies did a copy and paste. And some other companies just did a copy and paste, and company A is doing 4 years, so we'll do 4 years. However, that thing is supposed to be useful life. Useful life is supposed to be the period over which management intends to generate economic benefits. So in a company where you know that, we are going to use this company for 10 years, why put 4 years? Because by putting 4 years already, you have already misstated the financial statement. So many times, because many of these things are not, and that's why I said things like control environment, things like commitment to competence, that the people that are doing the work understand what they are doing very well. They are far more important. I'm not saying control activities are not important. Signing, approval level, they are all good. But the sincere is that they are more important ones that need to be looked into. Yeah. However, you could also have some limitations. I've explained some of the roles of some of these people here, of senior management, of personnel. The sincere truth is that even with your risk assessment, even your personnel, they should be part of the people that help you with risk identification. Like we tell many people, with risk identification, you might say that, oh, it's internal controls that is in charge of risk register. However, the operational people are the ones that know the risk that the company is more exposed to. So when you're updating the risk register, should you just limit it to the risk manager or the internal controls or compliance manager? Don't you think that the people that are operational, they can actually advise you more and say to you that, oh, I think this is the new risk in town. So that is why everybody is actually involved. So the work of internal controls go beyond the role of internal audit. Internal audit is a department. Internal controls is a function. And that function many times goes across the whole company. The board is responsible for it. Senior management, the board is responsible for ensuring that they have in place a system of policies and practices that have been approved by them, that are operational. It's the role of senior management, however, to ensure that those things they have established, it is being done. And it is the role of personnel and other staff to ensure that they are doing their own parts. It's the role of internal audit and controls to, however, ensure that they review it regularly, like this ICFR we are saying. And it's the role of the external auditors to now come and do what they call an attestation or an assessment of the report for ICFR that we have given them. Yeah. Any questions at this point? I think any questions before if I can take one more line, any questions? Because I know that I've been talking to myself, and I know that in a training, when you are talking alone, you might be the only one there. Any questions at this? Yeah, we will share the slide. Okay, so the meeting schedule. Okay. Okay, any question? So, yeah, I can see Ayobami, please, you can ask your question.
Okay, yeah, good morning. This is Ayobami. Thank you for the training. So, my question is, so this ICFR over financial reporting, internal control over financial reporting, so is it going to be a separate report apart from the financial statements of an entity, or is just a certification that on this statement there is there's an internal control over this financial reporting, like just a certification under it?
Okay, so let me just explain again. So, with the financial statement, like I said, before now you have one opinion. Now you will be having two opinions in that financial statement. So the role of the auditor is to give that opinion, the second opinion, which they call an attestation of internal controls over financial reporting, is an opinion. However, the report that will make them to either give that attestation or not is what they call the ICFR report. So there's going to be a report. Let me give an example of a sample report so that it will guide us. I just want to, I don't know, am I still sharing screen? Okay, I think I was bounced out at the point. Okay, so let me just look for a sample report so that you can just. So this just is. Please, can you still see my screen? So this is a sample. It's still coming up. Please, can you hear me?
Yeah, we can hear you, but we can't see your screen.
Yes, we can hear you.
Please, can anybody see my screen?
Yes, we
Yes,
can
we
see
can
you.
see your screen.
Okay, so this is just an example of an ICFR report. And while giving this ICFR report, for example, this is the letter of certification. And in addition to that, there is now a confirmation of the internal controls over financial reporting with any of the lacunas, or sorry, any of the weaknesses in there. And another thing that we normally give to clients when we are done is the risk matrix. Let me try to go and look at an example template. Many companies will say, give me a template, but the sincere truth is that if you don't understand what you're doing, template does not add any value to you. Yeah, template regulator will pass you. Like when we started IFRS, then many companies. I was doing one company. Is one of the big oil and gas companies. What they did was just to, when they filed to SEC, they just changed their normal financial statement and put IFRS in front of it, and that was what they sent. And the regulator did not even know the right one or the wrong. So this is the risk matrix. In our own template, you have the materiality how we determine transaction level matrix, and you also have the entity level matrix for each of. So each of the environment is what we test one by one and monitor. So each of those guidelines that you actually have, each of those 5 components is tested when we are doing this. So, Madam, have I answered your question? I don't know whether I have. Madam, the madam that asked the question.
Yes.
Okay, thank you very much. Okay, so someone else raised his hand. So let me see. Michael, you raised your hand, please. You can go ahead. You can unmute to ask your question. Okay, any other questions for me? So I think some people are actually asking for the slides. Okay, you can go ahead and ask your question, please.
Yeah, now I'm saying that now that the internal control over financial reporting has come over now, so does it mean that the ISA 315 no longer subsists or can no longer be used furthermore?
So thank you very much. So ISA is the international standard on auditing. So it is used by auditors when auditing. So auditors will still do what they were doing before. But you see, the ICFR is like management is giving itself an assurance that the pipe that is bringing the water of the financial statement is correct. So to an extent, it doesn't invalidate the work of the auditor. That's why you are paying the auditor. They will still go ahead and use ISA. But it now gives you, like I said, integrity of your own process and practice as management. So it does not invalidate the other one. That one is for auditor. Please, have I answered your question?
Yes, sir.
Okay.
Yes, sir. Thank you.
You're welcome. So I think what one of my colleagues actually, I should give control. F-Man Secretary, you are the owner of the control in the first place. This thing is there, I should give control. Okay. So any other question? Okay, so Bola, you have a question. I actually have this questionnaire here. There's a questionnaire dropped by one of my colleagues here. Please, you can just fill in that questionnaire. I think some of us are asking for the slides, so they will just take the emails there and send the slides to those emails. Okay, I think Bola, you raised your hand, so you can ask your question.
All right. Thank you, sir. So this ICFR report that is expected to be integrated into the annual financial report at board level, is there any specific function at the board level as in we have committees of the board. Yes. This particular responsibility, where among these committees of the board does this actually, lies? That is one. Two, at the management level, you have been able to succinctly differentiate between the functions and the role of internal audit and internal controls. Now, this function, where does it fit in, even at the management level?
Yes, sir.
Okay, thank you very much. So let's start with the board. So the work of the board, in most cases, that's why you have committees. So you actually have an audit committee. So some companies will have it as audit and risk management committee. Some companies will have it as audit and audit compliance and risk management committee. So in most cases, remember that the hand of the board that looks at anything around risk or around controls in many companies is the audit and risk management committee. So that committee might actually have more time to be the one to be in charge of it. They are the ones that normally will actually look at your audit plan and all that. They now report back to the board. So it will still be them that will be looking at that when it comes to ICFR. Yeah. Remember, the role of the board or the role of the committee is not, it doesn't absorb the full role of the board, but it's their hand to do more reviews rather than asking everybody to be there for all of the committees. So that is their boss. And their role as a board member, remember, is to ensure that there are policies and practices in place to review the performance of those policies and practices and see whether those things should be changed or they should continue. Yeah, and they also check out for compliance related things. So their role is still stay with them, and that committee will be the one that might actually look at that more. Then to answer your second question, which was looking at who in management, who is responsible. Now, I explained before that when it comes to internal controls is not a department. Yeah, it is a function, and everybody is responsible. I think I used a slide to explain how everybody is responsible. Everybody is doing one or two things, whether it's the board or senior management or even the staff. For example, if the person that is supposed to approve did not review what is supposed to review well and he approved, that is already telling you that internal controls has failed. So internal controls is everybody's responsibility. However, if what you are talking about is ICFR, who is responsible for doing this? I would say internal controls. Yeah, because I want to believe that some companies have an internal controls department. Yeah, so you can just give it to internal controls. However, if you don't have internal controls, internal audit too can do that same role. And the role they are doing now, I'm not talking about the role to do internal controls work throughout the company. No, everybody is responsible. However, for churning out the reports and ensuring that it is done as the hand of management to ensure it is done, your internal controls department can actually be tasked with that. I don't know whether I've answered your question. If I've answered, say aye. If I've not answered, say yay.
That's it.
Yes, sir.
Okay. This one is silent, so I don't know whether it's aye or yay. Okay. So, Mr. June, you can go ahead, please.
Good afternoon, everyone.
Good afternoon.
The question is, the ICFR report itself, are we expected to submit it to the regulators, to FRC, or will the attestation and the certification in the AFS suffice?
Okay, so just the same way you actually have your financial statement, and the regulators or FRC, now they are asking that they should also submit the report. Yeah, apart from the attestation. You know that, like I said, and I gave an example of a company that just went to go and do copy and paste and say we are doing IFRS. Hey, this recording, I don't know. The recording, that was what I wanted. Don't worry, the secretary will be able to speak to this recording one. That was what I wanted us to, but no problem. Secretary will talk about. So, like I just said, madam, you are supposed to at least, FRC is asking them to bring the reports that gave the output to. But if they don't ask you, you can just say AFON. So when you're submitting the financials with them, you can also put in the report. Please, have I answered your question?
Anything that is bringing up.
Yes, thank you.
You're welcome. Okay, so please fill this Google form. I think we also.
I have access, because the last time when I tried
we'll see how you can get a video link.
You don't have access to this, only admin
of what we have done.
Blah, blah.
And the slides will also be attached, and we just, because of the size of the slides, we might actually just put it on a drive, whether it's Google Drive or any drive, so that basically can just, or we transfer so that you can download. Okay, So please, you can just fill out the Google form so that you can we can get those information, the email to send it. If no other questions, I don't know whether you have learned anything. I can see a documentation from the meeting schedule is about to end. Okay, I'm just trying to read some of these. Share the. Okay, so Wahab, you raised your hand.
So, good afternoon, everyone. I just wanted to find out if there's any kind of like a guide on the reports that are expected with regards to internal control.
Okay, thank you very much. Okay, so like I said, what guides what we do, and when I mean we from GODP, what we have been using is what is recommended by the FRC. What is the COSO framework. So the COSO framework already actually has 5 components you need to you need to actually comply with, and 17 principles. So also when we assess it, we assess based on those. So the report that we use is also broken into that, and we now have a summary as part of the first set of like an executive summary, so that basically you can get that. So yes, there's some sort of framework of how it's supposed to be. Yeah, there's some sort of framework. I think we should have a full class. This class is actually supposed to be a 2-day class, really, but since this is an can you hear me?
Yes, we can hear you, sir.
Okay, so yeah, thank you very much. When we have that full class, I think we are having a full class, a 2-day class, subsequently. And let me also say this: we actually help companies to comply or to do their ICFR. So we have been in discussion with FMAN too. So we are very open to actually guide you and help you with complying with ICFR. Yeah, so we are very open, and we're also doing this talk with FMAN. So thank you very much. If no other questions from me, I would like to say thank you. So please, you can just drop your. We'll send the video, the one that we can send, and the slides. Please just fill the form, and we can get the information to send it to. Thank you very much, Mr. FMAN.
Thank you,
Okay.
Thank you so much. And I know that if I give the whole day, you are comfortable teaching the entire day. And I really appreciate your time and those that have found time to join this webinar as well. So I know to some extent we've been able to get something from Mr. Akinyelu. I know that we'd like to have more, but this is the time because it's, as you well know, it's just for us to have an overview of what data ICFR is all about. It has come to stay, and some of our members have already embraced it, and they are enjoying the dividends of using ICFR. So we will advise as much as possible. Again, it has come to stay. It's a regulatory requirement. And for FMAN, what we try to do as much as possible is to create a platform for everybody to know about it, to learn it, and then you can then take your decision whether or not to comply or not. So that's really your decision. And if the hammer comes from whichever regulator that is asking, we will be able to say that we've done our own part. So, and this is one part that we are doing. We know, again, it's not comprehensive enough because of the time that we have. But again, we can, share Mr. Akielu's contact or his representative's contact for us to, speak further with respect to knowing more or engagement, as it were. So this training, this webinar, I won't say it's a training, this webinar per se, again, it's an open, it's a way to just give us to whet our appetite with respect to this ICFR. So again, he has just shared the email and the phone number to reach him on, so that you can begin a discussion around it for whoever is interested in speaking to GODP on this. So on this note, we want to appreciate everyone again. Thank you. We will get the slides from Mr. Kiyelu, and then we will share with you so that you can read more, see the dividend of this ICFR, and then begin discussion with respect to either you want to comply through them or with through any other consultant, or if it is something that you feel that your organization can hold within the organization to do, that's so very much welcome as well. So on this note, please fill the Google form so that we can have the email to send the recording and the link to this material too, and everybody can have it and read more and get more knowledge again. So if there is no other question, is there any other question? Mr. Wahab, your hand is still up. Do you still have a question? Or you want?
Hello.
Hello. Watershed. Do you have a question? Please, can we have this? Whoever is speaking to, please mute. Hello. Please, can we mute everybody? Watershed, do you have a question? Watershed Capital. You raised your hand. Do you have a question? Hello, Watershed. Okay. Please, if you do not have, kindly just bring down your hand, please. But if you do, please ask your question. Okay, brought down your hand. So again, we have the email and the phone number for Mr. Shiwaki. Just please reach out to him if you have other questions, and of course, if you want to get the materials, please fill the Google form so that we can, through that Google form, share the email that the material and the recording to you. So we have come to the end of the webinar, but we will leave for the next 5 minutes. For those that are interested in getting the information, please fill in the Google form so that this can be sent to you. For the rest of us, we have already done that. Please enjoy the rest of your day. Thank you for joining this webinar again.